hang on a minute. I haven't switched my light on. Oh dear. Sometimes when you're away from the office for an extended period. Hope you're all well. It's Thursday. We have got to Thursday already. It's hi, back. It's the 24th, the end of the month next week, 4th week of July completing. We've had a really good trading week so far. The dollar's helped us quite significantly this week. More on that later on. What a busy day we've got. Obviously, the main focus, the main three bull. You can see that on the if you can see that on the calendar there, the main three bull announcements. Obviously, the deposit facility rate expected to not change from the ECB, so the interest rate remains at 2.515%. Obviously, that's the thing that's driving the president to distraction. And if I just bring in where's my little Forex Factory one gone, because it shows you the on the Forex Factory calendar, it shows you the comparison rate for the Fed and all the other major banks. You can see the Euro ECB down here at 2.5%. The dollar Fed rate remains 225 to 250. You'd have thought that would have supported the dollar. It isn't, is it? We are moving lower. We've continued to move lower, excuse me. So we have got a visit by the president, 4 o'clock Washington time. The president is visiting the Fed. Mr. Powell isn't going to be there. I'm pretty sure he's not there. But certainly he's going to go and throw some of his significant bulk around and start banging the table, no doubt, and have a look at all this marble that he thinks has been overspent, that's been approved by members that he appointed. But anyway, yeah, Trump to the Fed this afternoon in Washington time, which has been a major announcement. The markets continue to roil about and react to the trade talks. Obviously, yesterday we had that Japanese deal with Japan, which was much better than many were expecting, particularly. I think a lot of people in Japan. So 15%, some of the key car components and car manufacturers have got away with one. Many of the US car manufacturers are saying lots of grumbles out of GM and Ford overnight. We also got a deal with the Philippines for 19%. Indonesia, I think, got a deal as well. Obviously, the next big target is the European. So the EU are meeting, trying to get to this deadline. But I mean, Trump's deadlines keep moving back, don't they? But this one seems to be being reacted to more significantly by different countries. I haven't, to be fair to me, I should say, I haven't actually drilled down into the detail of these trade deals. They can't be trade deals. They can't be like sort of T's crossed and I's dotted. Significant deals that are going to last a long time simply because they've been done too quickly. And I know I might sound like a bit an old fuddy-duddy, but these have been pushed through for political reasons, particularly for the Trump administration. So there will be holes in them somewhere, and like the Japanese one. Much better than many were expecting. So we've got a rally in the Nikkei, we've had a rally in the US stock markets, we've got all-time highs in the DAX as well yesterday. Come down off that today, but dollar continues to be under pressure. The earnings season is going full tilt. We've had nearly 24% of all this US S&P 500 companies reported now, and as we were suggesting a while ago, they've done better than expected. 85% have actually beaten on both the top line and the bottom line. That means that top line being the sales, the forecast agreement have beaten the Wall Street analyst expectations, and also outlook is starting to get sort of coloured now by the impact of the rate deals, the trade deals. Remember, the beginning of the first quarter, lots of companies were reluctant to put forward guidance. That's starting to come through now on many of the companies that reported. And Alphabet yesterday, on the first of the big tech behemoths that have lifted the stock markets report, it's better than expected. So This morning, PMIs continue to weigh, particularly in the manufacturing sector. If we look at actually, we go back to our calendar, it shows you much more clearly. France, remember, anything under 50 means a sector is in contraction. So if you look at this in broad terms for July, French manufacturing and services are in contraction. German manufacturing coming back, but still in a contraction zone. A tick higher, or 4 ticks higher than last month for the services. So we have finally ground over in Germany into expansion zone in the services area. The manufacturing remains in contraction. For overall in the Eurozone, again, we're just grinding forward. It's very, very weak, but we are into expansion zone. More disappointing data for the United Kingdom today. There's been a series of disappointing data points over the last week or so out of the United Kingdom. Services 51.2 from 52.8 last month. That's quite a decline. The composite down to 51 from 52 last month, and manufacturing remains better than expected, but still in that contraction mode. So overall, it's pretty dour numbers from the ECB. So I'll say 5 minutes to the ECB decision. Not a lot of market moving unless something dramatic happens in the press conference later. Not a lot of market moving expectations from the rate decision. No change expected, and that's been telegraphed for a while. They're still looking for 2% by the end of the year, 2.15. So there's a little bit more to go from the ECB. This is gold. Let me just put you. Let's have a look at the main player, which is obviously the markets panel, the euro. So the majors. So we were short all of these. Has been going gung ho euro. So we're at. Let's come down to the 5 minute chance. See how we react to the data. So 117.50 this morning. We've rallied from a low of 117.43 earlier on this morning. It's 11:35 here on the 5 minute chart. You see we've been short on this from, I don't know. No, we were long, weren't we, on the high time frame? But anyway, 117. If we look at the so if we got to the daily like we were at the beginning there, sorry. No, very big euro bounced off 118 for the first time. Looks like we're like waving back to 118. So there's a key resistance at 118, but these are like multi. If we got the monthly, I'm sure you these before, haven't I? These are multi year highs here. So taking us back to September 2021 highs at 118 for the euro. Massive rally for 2025 euro dollar on the weakness of the dollar, strength of the euro. You know, things only go in one direction when you have that set up. So consolidation at high above 117, the purple line here, and constricted at the moment by 118. So we're still bid here on this higher time frame with our 20-day moving average at 116.70 now. So just go back to the 5 minute chart. The data is about to drop. So we've got 1750 here on the 5 minute, and we've sort of rolled over and down a bit on that. So I say I don't expect too much movement on the euro unless there's a big surprise from the ECB with the deposit rate expected at 2% and the main finance rate, as we see on our calendar, at 2.15%. So see what the statement says when that comes out. Elsewhere, I say the dollar's been under pressure. We've been I'll wait till the data's out. Actually, I'll just run it through quickly. We've been we look here. We've been short Aussie, long Aussie dollar. That's still live. Our latest stop loss is up here as our target. Our entry was back here, so it's pips in the bag on that one. Canadian dollar, that's fully closed now. We have entry here, first target here. Our stop loss was dragged down to here yesterday, and you can see we just spiked up to it and took us out after we'd been as low as 135.76. We got took out there at 136.26, I think, something like that. So that one's closed. Swissy has been really good for us over the last few months. Again, taken out as we brought the Stop loss down to our take profit, so that's a full trade closed as well. Dollar yen similarly all closed out here yesterday as we went back up. So the stop loss yesterday continued to go lower yesterday. We went to 145.90, so we went under 146 yesterday for the dollar. Remember, the yen remains very weak, but obviously got a massive lift on the trade deal being confirmed, and obviously did NASDAQ as well. So let's see what that news looks like in a couple of minutes as it comes out. So we've sort of slipped a wee bit the euro this morning, down on the rate expectations. Kiwi, I think, is still open. I think we've still got half the position still open on this. Yeah, there we are. There's our stop loss now. So Kiwi still open. Entry here, target here. 50% of the position closed, and we just trailed our stop loss up. So that one's still open. I think sterling's still open as well, isn't it? Oh no, that's got stopped out this morning. It's fully closed now. Again, target, stop loss ragged up above first target, and we come back to take that out this morning as it's rolled over on that weak US UK date. So interesting, 135.82. It's a new line in the sand on an intraday basis for sterling, certainly this week at least. And I say euro 117.35.45 here into the 50-hour moving average, and I think that closed. That was closed earlier on, wasn't it? But as you can see here on the hourly, we're still, rally, retrace, rally, consolidation, rally, very spiky move here on the hourly chart to the upside. 118 is the big upside target to the upside, but as you can see, the 20 and the 50-day or the 50-hour over the last few days this week have supported this move to the upside on the euro. So if we just come back to the 5-minute, the data's dropped, and euro's actually ticked up a wee bit on that. So obviously no change. This one doesn't. Ours doesn't review, does it? No change there. Let me see what's been said elsewhere. Bring in another feed. So no change from the ECB. Deposit rate 2%. Rate financing rate at 2.15. The statement. Let me see. I can find the statement. As expected, euros. Nothing. Marginal lend rate 2.5. There's nothing in there. No. So really, statement. I've got a copy of it. I can't. For some reason, my link to the ECB website is what I'm trying to read it directly. Hasn't connected properly. But yeah, there's nothing. There's obviously nothing in that that's really market move. And we had this is our 15-minute candle. So we've been down all morning, guys. A bit weaker. We may take some of that out. So where are we? Where did this morning start? So if you're trading this on a basis, we've been as high as, that's our high for today, or today's high. Obviously, bearing in mind that the trend is higher, so you would be looking to take long positions rather than these retrace short positions, and that's our low of the morning ahead of the ECB, and obviously post the weaker, miserable PMI, manufacturing PMI data. So we've dripped lower. Well, low of 117.50. So that's clearly 117.50, big round number. So we're up. So we're looking to try and keep this moving higher. This reaction to the data. So there was certainly a cross here at 45. So half an hour before the data came, the main ECB announcement came, would have taken you long here on this strategy. In fact, it would have gone long there and then stopped you. Depends where you did your stop loss. Actually, you might have still been in long that, but certainly that would have been your next long position here on this 5-minute trading strategy there at 17.54, and you're still long basically, because your stop loss would be well, initially zoom that in. So your stop loss would have been here at the bottom of this, the turn in the last turn in the market at 117.46. You'd have entered here following the rules on the close of that candle. It's assuming you're ignoring the news, which is always very, very, very difficult to do, or very dangerous to do. And we've moved up. If you're being aggressive, you could have your stop loss below that wick there and just below the 20 period moving average there. So 117.50. So you've got in there. Your stop loss is here still, and it's mincing about, but a significant candle break of the 50 and the 20, obviously that would take you short if your stop loss is there, would be required for this to go short again. But remember, we're going long with the higher time frame trend. So we're long euro there from that level there. Let's just do this. Why not do this? That would have gone long there ahead of the news. Whether you would actually taken it because of it's such a significant news, I would question. But there's a strongish candle there. Change the color of that to green for go. So we've gone long there. Our stop loss, I say, initially down there. It was probably round about here now. Let's put that in our stop loss and see what happens while we have a look at the rest of the day, see what happens. So we put our stop loss round about there, through there, make that red because it's stop loss, and see how we go. Oh no, where's the red gone? Pink, there we are. So we're long, and it's just sort of sideways at the moment, but we are above those areas. So cross up could be positive, but see if we get stopped out before then. But it's following the rules, my friends. I say you would have gone long there initially, actually, would have been the first long, would have been here earlier. With your stop loss down here. So that's probably still open as well. And that would have been your second, actually, that's what would have happened. That would have been your second entry here. Unless you got your stop loss too tight on the first one. So these are two entries here, one from here, one from there. That entry now is or the stop loss on the second entry is now below the entry of the first candle. So anyway, we're long euro there on the 5 minute. We're long obviously on the, or we had been long with the trend to the upside. So let's have a look if it's managed to let me in. It's obviously too many people hanging around at the ECB website. So domestic price pressure continue to ease, wage growth more slowly. The economy has so far proven resilient. I love using that word, don't I? In challenging global environment, we'll follow a data-dependent meeting by meeting. So again, data-dependent meeting by meeting. I've been saying this literally for years, approach to determine the appropriate monetary policy stance. We are not pre-committing to any particular path. There's nothing new in the language somebody's written here. I just want to say exactly that. Flexible approach, pause through the summer, which is sort of what we got, and see if she gets drawn later. Miss Lagarde is due to speak in when's she up? Press conference 45. We're at 22. We've obviously got the key US claims data in 10 minutes time. We've got retail sales out of Canada as well. So we'll flip to the dollar CAD. So all sorts going on today, my friends. Keep your eyes peeled. So we'll see what that looks like. But nothing as, again, very, very much predicted. Again, if we just click on the chart here, you can see the slow. We've had consecutive cuts, and now we've had two consecutive monthly or meeting cuts here from the ECB from when they started back here in this time last year, June last year, or 11, 12, 13 months ago, and continue to move down through 2025. And we paused or we cut again in June, and we've paused in July. So it's probably as predicted, but still market is expecting us to get below this 2% level by year end from the ECB. But they say that PMI data we've seen today continues to be moribund and changing glacially. Obviously, the politics is now coming very much into play. There's a meeting today between the EU and China, and that is apparently, there's lots of reports of that being really, really fractious. Obviously, the EU, big trading bloc, and China's obviously having problems or getting tariffed to get stuff into the EU. Always has, but now it's got tariffs getting into the US. So these two second and third big trading nation blocks very much need to find a more comfortable and better relationship. But it's been a bit fractious, the meeting this morning, and so that isn't helping things, and it's probably added to the weight on the euro. This morning reports on that ahead of the ECB. The ECB, nothing to change, and we're not going anywhere on the euro once to the upside, particularly, are we? But we're still holding since the announcement, since the break of the 50 period here on the 5 minute. We've sort of held it, and we're moving up to the upside at the moment. So little change, as I say, 117.55 again for the euro dollar. So a further sort of 25 basis points, possibly by year end from the ECB. So taking it back under that 215 under the, or to the 2% level, really. So again, nothing to really write about or report on that. See what Miss Lagarde has said. See how she gets. How she answers some of the questions. She's remarkably bullish on the euro at her press conferences, and continues to remains likewise. So is expected to remain likewise. Claims jobs in the US next up in the next few minutes. See if that obviously changes this pair. Obviously, that's the other side of the trade deal. And we got retail sales, perhaps less insignificant for the Canadians, also coming in 5 minutes time. So if we have a look at the dollar CAD today, as I say, we were, I think, was that completely closed? I think the CAD position is completely closed yesterday, and we've only got, we were long Aussie CAD, which is still open. We've got no CAD exposure. I think we've got Kiwi, Aussie, Sterling. That's been closed now. DAX was also an open position. So dollar CAD here again, higher time frame, remains very much in a downtrend, bouncing into this, or charged into, if anything. 136, can't breach and break away from 137. Very well shy of 138. Last week, when we did have that strong engulfing candle here on the 17th, taken out, or adding to the position that's gobbling up the 16th candle. But then since then, 3 strong moves down and a big move down on Tuesday into 136, and we struggled to hold 136. So you could argue bump, a bit of a triple bottom. There may be some buyers down here for to my close that, remove indicators. Is that my MACD? Sorry, MACD, might reinstall it. There we are. So daily remains weak, sort of moving down here again. RSI at where are we? We're at 41, so we're under the. It's getting quite negative again from being sort of fairly neutral, but again we took some move on that move we've taken, and that's all closed now. But 136 looks like triple bottom forming, but also you can see a nice channel forming here. So consolidation at lows, we can still go lower. If we look at to the weekly time frame, you can see how weak this is and how key this 136 zone is. Takes us back to September last year, but you can see we were weaker than that, so we can easily go below that. The support of that channel there took you under 135, so 135's next big support area for dollar CAD, and the trend remains set there on the weekly. It's pretty set there on the daily, so be careful trying to buy this this rally if it's not going to breach 137 significantly. And certainly the recent high through the summer has been 137.50. That's the key where the sellers are still sitting, I would guess, on dollar CAD. But anyway, that's higher time frames. As far as the news that's coming out at the moment, we've been it was long, then it's gone short. It's got a big spike there at 1 o'clock. and let's have a look at what the data's telling us. What still hasn't come out. So we got retail sales and the claims. Remember, claims, jobs remaining remarkably robust. Certainly these initial claims and the continuing claims. Let me just update. Actually, I'll wait till the data's come through here in the next minute or so. But as you can see here, 221 last month was last week was much less than again fourth consecutive week or fifth consecutive week. We take this June 18th, fifth consecutive week better than expected. These were the brown ones here are the forecasts. We take those off. You can see the trend is coming down. It looked like we'd moved up. Remember these? I was calling these outliers earlier in the year, wasn't I? When we went over 240, and then we had these 3 consecutive weeks over 240. Looked like this was going on, and then we've turned around really aggressively. And put the revision on for we've revised down as well. So it's all rather positive from a new unemployment claims, but it's a sign of tightening of the jobs market particularly. So again, those that have got jobs seem to be doing okay, but there was a ramp up when we drill into the data. There's been around when we looked at the non-farm payroll data, there's a ramp up bizarrely in the government employees, and that was a spike because of the teachers coming to the end of their annual contracts. So let's have a look at what this looks like. Core retail sales in line with expectations. The annualized, monthly rates. The headline is a bit worse than expected, minus 1.1% when it was expected to be minus 0.9 of 1%. And yet again, 217, so under 220,000 for the new claims this week. And that is what's that? We haven't been down here since April. And again, that looked like an outlier that particular month. It was that week, I should say, as we hung around the 220,000. So the week of April the 17th came in at 214,000, and that's the best for new claims. Again, Mr. Trump will have another bit of stick to beat Mr. Powell with, metaphorically, because he's not going to be there. I don't think I'm saying he's not going to be there. Perhaps he is. There's no actual meeting shows. It's just that Trump's turning up at the Fed. So 217,000, again, better than expected. Miss Lagarde up in 15 minutes. So let me have a quick refresh of our calendar, and we'll see the ongoing, more details here on the ongoing claims. It's done that thing again. Right, it's got everything in. You have to refresh it. I don't want all these number ones. I don't want all of this. Select all. I don't want all these countries, but if I apply 2 and 3, it gets rid of a lot of it. So Thursday, here we are. So continuing claims, 1.955 million. Again, better than expected. Last week's was also revised lower by 5,000 to 1.951. Initial claims 217, as we saw there. So that's the 4 weekly average as well. I've got the 4 weekly. Actually, if I put the one on, it'll give me the 4 weekly average on it. So having said I didn't want the ones apply, just give me a lot of other stuff I'm really not interested in. But 4 weekly now 224.5, so under 225, significantly below 230. So jobs remain tight in the year of I'm going to correct myself, but it's not that. Remains a tight jobs market. So what's the unemployment numbers going to be like? Non-farm payrolls, remember, that's coming around. It's next week, isn't it? I think the 1st of March for a change. Let's check. Next week, I think it is, isn't it? Next week. Might be, is it Friday? Non-farm payroll, so it's next Friday. So that'll be really interesting to see what that unemployment rate is like next week, and what this rate of job creation is like in the US. And again, the earnings should be holding up quite well. So all this talk of a recession earlier in the year is well out of the window. And as I say, the second quarter earnings has proved very positive, with say 25, nearly 25, nearly a quarter of them all in. It's obviously only a quarter, still 3 quarters to go, and the big tech companies are reporting next week, and we have 85% of them beating expectations. So strong second quarter, as many were expecting, hence the melt up that we've got. So dollar up against the Canadian dollar, loonie. Immediately on the jobs and the weaker retail data out of the US, 136.15. See how it's impacted the euro. That jobs number out of probably yeah, there we stopped us out our long position of the following the ECB. So there we go, losing trade, stop loss hit. Back to 117.45. So dollar up on the better than expected jobs and numbers. So is it going to raise the impact of the Fed having to act? Where's the Fed? See if this is updated. It's only been 5 minutes, so it may not have updated yet. Obviously, that's our meeting next week. Nothing happening next week was the key one. So obviously nothing happening in August apart from their chat out in the wilds of Wyoming. So 62% chance of a cut, 36% chance of it not happening by the September meeting. So yeah, so that jobs has moved things down. Look at this. It's really interesting, isn't it? A month ago, there was only a 14% chance of it being the same as we were in September at 425 to 450 a month ago. How that's changed around very aggressively. Now 36%. That was 47% a week ago. It's come down a wee bit, but yeah, a long time in markets, isn't it? So rates, may or may not be coming down. 62% think we will, or the market is currently pricing at least 25 basis cut in September. Many have pushed it back again. There's still, I can say, there's the chatter of 2. Can't really see two now, to be honest. But that's unless the job market continues to hold up, and we have a blockbuster non-farm payroll in detail next Friday. So obviously join us for that, my friends. Big day, yeah, and lots of data, lots of things to get your teeth into. So the downtrend, the brief rise on the here on the 5-minute chart on the ECB has been counteracted by closed long and then a trigger in a short, which probably wouldn't have got filled until here, to be honest. On that, in fact, no, it would have got. But actually, where was I saying our stop loss was? If this is our entry, that was our second entry. Stop loss would have been right. Yeah, so that would have triggered, as it's gone under, it would have triggered a short as well, automatically in the system. So the 2 long positions have closed out, but it's gone short. Well, it probably wouldn't have been filled there, to be honest. It probably has got filled on this candle here on the 5-minute time frame down here. So we've got a second entry down here, and as that's gone under a key level, might close that out quite quickly. But yeah, the long has failed, but the short is in the money here on the 5-minute strategy. But it would have been short all morning as it's trended lower. That long is the one that's gone against today's trend. But obviously, if we go up, the time frames, the hourly topped out last night, and it's been short all day here. So it's been with the trend. So the 5-minute is actually with the daily trend, but against the higher time frame trend. So the hourly has gone down. The 4-hour will still be bid. I would think, yeah, there was 4 hours still okay, showing signs of weakness, but still bid. The 20 is all the way down at 117.24. So that's still bid. The 1 hour's rolled over already. So intraday, euro dollars short, and so that 5-minute chart was actually against the intraday trend. So the short that's just triggered on the 5-minute here, all the way, even if we didn't get filled here, is actually with today's trend. So where will the support go, or where will the low go today? Well, if we go to the hourly and look at where we are, well, we're under the 20, we're under the 50. So where's the next support? What happened last time we did this? Well, it was it was it didn't last very much. It's not. It's ran. So this is a significant. If this obviously on this hour closes now under the 50 period moving average, that will add all shorts. So, God, extra systems will be triggering to put shorts on there. But the next cluster is this level here, 117.30 today. And then the area 117.30, 117.25 is the next downside target today. And then we've had this strong 4 candle rally here on the 22nd. So then below that takes you to 117.10. You can see through here, just ahead of the 117 area. They're the further 4-hour. So 1 hour targets to the downside. A re-breach of this level through here. So to take this long, we now need to get through 117.60 today, if that suddenly turns around. But at the moment, we're moving lower euro dollar today. Right, let's have a look at elsewhere. Crypto today, Bitcoin still just shy of 120,000. We're at 118,400 today. And again, a little sideways action, but the trend is very much consolidating, as we've been saying for a while now, at these all-time highs, or were previously all-time highs for Bitcoin. So consider sideways action. And press news has been very positive. We had that big breakout, which I'm sure we're having big areas of consolidation through the 112 area, and 123 remains our all-time high. Here on an end of day basis, we're struggling to get over 120,000, but still it's not one to be selling at the moment. So Bitcoin remains bid consolidation phase here at all-time highs in this second half of July 2025. And as I said a few days ago, August 2017, we went through $3,000 for the first time, and here we are, 120,000. Huge moves. The oil market remains in a bit of a weakening state from this sideways action we'd been in. So we're in this week. We've seen the testing of the 50-day moving average four times this week. So every day this week we've been into this zone here. So we've breached the $67 area this week. We'll actually come back to it today, but 66 is the next support area. So we're drifting sideways in a weak sort of July market, a bit directionless. Obviously a major political announcement may move the oil market, but at the moment we're sort of at the bottom end of the channel we've been in, so a bit more weakness could be anticipated from the oil market. Our indexes, we went to all-time highs yesterday. We've got open positions still on the Dow and the DAX, haven't we? It might have actually been taken out. In fact, that looks like that's been taken out. So we dragged our stop loss up here. We got in here on whenever it was, the 21st, new all-time highs. Big strong candle yesterday. This is 4,500, not quite all-time highs. There's that intradays, 45,000, 45,000, 45,000. Didn't quite get there yesterday, so we've dragged the stop loss up, taking a few hundred pips out of that. I'll point out that, but remember the spreads are relatively wide on the Dow, but percentage-wise, it's still a decent move, and that looks like that's closed out in. Whilst I've been, yeah, there we are. Whilst we've been talking, as the dollar's improved, the stocks have come back down, and I've rammed up the stop loss into this area this morning or yesterday. I can't remember where it moved it, but that's now completely closed. So the Dow is completely closed. The DAX long, which is a bit speculative, that's looking a bit dodge as well. Stop loss is down here, so we might be closing that one out as well. Actually, it's a set and forget end of day, and so I'm happy to just hang that at the moment, but it's moved down relatively significantly from our entry, obviously at all-time highs. Just this, was it this morning or last night? It was this morning, so we had new all-time highs, 24,565 here on our DAX chart, but we're out of the money on that one as it's moving lower. But stock markets obviously remain very, very well bid on the higher time frames. You can see DAX consolidating at highs, having hit new all-time highs yesterday. The Dow, there's that poking to the 45,000 level, still bid. The 20-day there at 44,180, and the 50s all the way down here at 43,240. So Dow, 30 position industrial Dow remains bid. Nasdaq 100. Obviously, we had these Nvidia noise, or the Nvidia supplier yesterday. Hysync, the South Korean, reporting really good numbers, record numbers for the second quarter. And Nasdaq 100 down a tad today, but strong day yesterday, and continues to trend higher. Stay on your surfboard, certainly until certainly the tech stocks have all reported. I say Alphabet came out with some big beats on both bottom and top line yesterday. So we continue to move higher for the Nasdaq 100 and S&P 500. Legged higher yesterday, and that stop loss needs to be moved up through that our initial target here. Did we take some of that out? I can't remember if that's still, or did it take us? I can't remember. That's still open. No, it's not. Is it? No, it's the DAX and the Dow. So this must have been. We have to close that out. Must have been a while ago. SPX 500. We did, didn't we? Anyway, yeah, because we'd had that open since the 9th of July. That's right, we've been gone sideways. Like, did it? I think I dragged the stop. Oh, that's right. I dragged the stop loss up and it came back on an intraday basis to take that out. But there we go. It did get to our initial target yesterday, 1.5 times the ATR from our July the 9th entry. On July the 23rd, so patience as we were out of the money quite a while on that one. But again, stock markets continue to move higher, and that was a new all-time high yesterday for the world's most important stock market, the S&P 500. So up we go. Right, Miss Lagarde will have started chatting, I'm pretty sure, of that. Let's have a quick dip into what she's got to say. It's not started yet. The microphone's still on empty. Yeah, she's just reading the statements at the moment. Domestic pressures continue to ease, so she's just reading the main statement and see how she moves the euro. As we said, we were long. It was long, then we went short. See if she turns that around with some of the questions she may get asked. She's answered, phrases her answers. Euro still remains, read to the upside, but we'll say we're having a down day at the moment. Let's go back to our 5-minute candle. There we are. That's a suggestion there may be a floor there ahead of her press conference. So, but still short on that. I might have closed that out. It may not have any more weakness to go, but on that particular pair, because the dollar still remains pressured. So there we go, my friends. Gold is 3,357. Continuing this weaker run it's had as the dollar has weakened as well. So this spike when Israel hit Iran on the 13th of June. We had another rally to it yesterday, earlier in the week, like we were going there, but we've had quite a significant turnaround. First breach was here yesterday when we came under the 20-hour moving average for the first time all week, and then a big breach of the 50-hour into the European close yesterday. I was traveling yesterday, so I didn't actually see that until I checked the markets later on, but 3,400 was breached, and we've been down ever since, and continued to unwind today. So that again, that's another one. Just trail your stop loss down without on this one. Where are we going to stall? Well, I've got my T1 level there. It's a bit of a pivot area. There's one there which we're right at the moment. See that high? This high here. Resistance here, so we're right at that at 3,350 or 3,355, 3,350 zone. Then here on it is below 350, 3,345, and then you can see this where our last stop loss area was around about the 3,335 area. So those fives are playing out in that gold market today, as that continues to move down. But if we look at the daily time frame, it's still, again, a bit like the crypto market, a bit sort of consolidation. We're still consolidating these, these close to these all-time highs above 3,300. That's the main support area as we go through the rest of the summer for gold. That high, the high we got this week was lower than the high we had here at the beginning and middle of June. And we breached the decline from that, breached 3,300 briefly for one day. Now we bought it back. So you can see sellers perhaps targeting that 3,300 area for chance to buy more potentially. So, but we'll see. This is still a much of a sideways market. Can't break higher from the 13th of June, where you take that out because that was all done and dusted quite quickly, and we're still, the support is 3,300 if the bid holds on the gold market, and that's filtered out to other commodities. Silver's, again had a really good run. This is silver continuing to move higher at $38, $39 now. As that leg move up higher, there's the extension on the fib being breached initially here 11th of June, and then we've come back to test it and move higher again for a little move down. So silver very well bid. Platinum's really well bid as well. There's platinum from this consolidation down here earlier in the year, but what a rally that's had as well. I don't talk about it very much, but it's had a stonking move. I don't know if any of you trade platinum, but what a move that's had as well, outperforming gold significantly, silver and platinum in particular. I haven't got copper on here, but copper's done a similar sort of move as well. So there we go, my friends. Miss Lagarde is still talking. She's reading the statement. She's not taken any questions, I don't think. Yeah, I think she's still. Let me just check. Oh, I've lost her. Yeah, she's still. Still reading the statement at the moment, so I haven't got to her questions. So, big day today. Lots already out. Where are we? Let me find Thursday the 24th. So, week. Um, PMIs across the board from Australia through to Japan and Europe this morning. See what the US looks like later on. No surprises from the ECB at their rate announcement. They've kept the rate at 2.15, the deposit rate, facility rate at 2%. We've got the claims, weekly claims showing continued strength in the US jobs market. The 4-weekly average now under 225,000. Weakish retail sales out of Canada moved the dollar CAD, benefited the dollar. Dollar's a bit stronger on the day. I'll listen to what Miss Lagarde's got to say in a minute. And then in an hour's time, we got the US PMIs, and they remain, the best in the developed world. 52.9 for both last time. 52.9 for both last time. Both expected to come in a little bit weaker. 52.7 for the manufacturing, and the services at 53, a tad a tick higher. And then new home sales, 100,000 better than a strongish market. My line sounds always been around 550,000 for new homes in the US, and it remains quite a strong market, although there's signs of weakness across the board. So let's have a look what that looks like later. Mr. God speaking again there this afternoon. I didn't realize that. But, there we go. Some treasury bills, and then consumer confidence out of the US, out of the UK tonight. Tokyo inflation overnight as well. Japan very much in focus this week. So lots going on. Whatever asset you're trading, my friends, obviously take it. Sorry, I haven't. Dark Pip, sorry, my friend. I just seen your notice. Hello, sir. As it's a request, I wish I could reach you and share my thoughts with you. Maybe you will rectify me when I'm doing all wrong. Your content means a lot to me. Dark Pips, I tried to find you on our Discord group. Your name didn't come up, so join our Discord and we can chat there, my friends. Discord is here. My friend, this is our Discord group, theproptrade.com. This is us. This is the general chat area. There's all sorts of people in here. Nexus Traders this morning's been asking about multi-trading. High frequency trading is what he's sort of talking about, or was suggesting about getting into multiple trades. So I tried to find you, Dark Pips. Hopefully you're here, and I couldn't. You weren't here, so here we can chat here, and we'll take it from there. Okay. Best of luck, my friend. Let me just go back to my trades, my end of day trades. I stick them on my trades. The trades I share with the guys on the proptrade.com are here. I update them usually a couple of times a day, or sometimes depends how busy I am, what else I'm doing. But we're in the money. We're having a good week this week. Obviously, it's Thursday. Fridays could all turn on its head. That DAX trade wipes out lots. But there we are. That's what's open at the moment. What we said, one of them stop losses being hit, didn't we? I think it was the pound has been it's hit that stop loss, and the US 30 is 44.7. Let's actually check this while we've got you. It was the US 30. Well, I'll update this after we've finished here. Yeah, there we are. Let's check them. It's obviously in the trading platform, but yeah, that would have taken out. There we are. That's taken out that second half of that position which we got into down here on whenever it was. There we are. The afternoon of the 21st. I posted that as long, out of the money for a day or so, and then off we've ran the last couple of days, and that's now completely closed. Got to target one. Oh, I did actually put a target, did I? I scrolled that up. Yeah, 449.15. I took that out yesterday, and we've come back down to the raised stop loss, which is obviously all the way down here somewhere. We put that up, so that's completely closed. Let's have a quick look. And the other one, I think, was the pound, wasn't it? We said, didn't we? Let's have a quick look at the pound. Majors. Sterling. Yeah, there's that stop loss. There's the entry down here. That's the initial target here. So we got in here again against us for an hour, a couple of well, overnight or during the day, and then it's gone through, it's consolidated through the target, consolidated. Up we go. We got as high as 135.90. But our stop loss is at 135.46, so we're giving back some of that gain. But anyway, the whole position is now closed. 50% here and the other 50% here. So nice win on sterling as well. So that is closed as well. What else? So that's closed. That's closed. Kiwi, Aussie. Let's have a look at all these others as well. I think they're still all okay, aren't they? Aussie. Stop loss is there. That's still in the money. Kiwi. It's still in the money. There's our stop loss again. Target one's been hit. So that's that one. Aussie CAD, Euro CAD, Pound CAD. Let's have a look at those ones as well. So we go to crosses. We put in, they were all Aussie ones, weren't they? So put in Aussie. So it was Aussie CAD, was it? Yeah, there we are. Target one's been hit and our stop loss is here. So that could probably get dragged up a bit. I'll do that after as well. Yeah, because that's, yeah, it's consolidating now, comfortably raise that. Actually, let's do that now a wee bit. Lock in some more, or lock in profit, because obviously we got in here. That's our first target. Don't get a bit too close. 89. There we are. 89.88. There we are. Just make a note of that. 89.88. I think it is. Aussie CAD. Aussie's having a good day. What was the other one? The Euro, Oz as well. And yeah, stop loss, I could probably drag that down a wee bit as well. You know, now that the Euro news is out of the way. Oh, sorry, let's bring it to T1. So Euro, Oz to T1. I'll update this on this Discord group, guys. And Pound Oz was the other one. Pound, so Pound Oz is this one. And entry stop loss, take one, profits being hit. Oh, God, a big miss. I should move that perhaps a bit closer, but let's bring that to T1 as well. So they're both on the hourly 20 period moving average there. I mean, it's a bit aggressive, but anyway, so that's gone to T1 as well. So Euro, Oz, and Pound Oz to T1. Stop losses locking in more pips and points, but you can see the trend remains to the downside. DAX is going to say it's even more out the money when I wrote this this morning. So anyway, I'll update that later on. Any particular trades, potential trades tonight? Maybe some, I don't know. I haven't got my trading system open here at the moment. But anyway, I say, guys, if you're not with the proptrade.com, why not come and give us a go? Yes, there's hundreds and hundreds of prop trading companies out there, but we're as good as any. We're very clear, we're very transparent, very open. There's no there's no overnights. As you can see here, there's no swaps, there's no hidden rules. We don't like you risking more than 3% on one particular trade. That's just it's good trading discipline and strategy, to be honest. We haven't actually got a consistency rule, so many prop trades companies do have that. You can trade over the weekend, you can hold positions over the weekend. There's no swap trade and no swap fees ever. We got a one express account. Standard stage is the 2-phase, and there's also a pro account, which if you're interested in trading news, if we look at the let's choose that one. If we are interested in trading the news, you go to the pro account here, and it allows you news trading is allowed. Obviously the targets are a wee bit tighter. That's what you want to be looking at. Really, the things you want to be looking at is what's the maximum loss, obviously, but before that, what's your daily loss? So you don't want to be losing more than 5% a day. You're trying to get to 10%. if you are going to trade the news. There's pros and cons of trading the news. The volatility, when the news can surprise, when some of the big players, guys, have got positions they're trying to offload, of trying to fill. Sometimes they use these news announcements to hide a lot of their actions. So a news item that might look inconsequential, it's sort of in line, but suddenly it gets skewed by some of the big players offloading some positions or filling some positions. Yeah, just be careful trading the news. But if you want to do it, obviously you take the pro account, or you buy an add-on on the standard account. So whatever approach you take, we're here to help you, and just communicate, ask, and that's what goes on here on our Discord group, on the general chat. The support guys there, Johnson, Katzen, and Thompson, are just on the ball all the time. There's constantly see Katzen here, and where's Johnson gone? He was chatting on this morning. Well, there he is. Johnson's always support. Thompson's the other key interaction support guy. Instant response. Very, very clear. So come and give us a go, guys. If you're new, you can get a 25%. If you put in new, you haven't had an account with us before, new 25 takes off 25%, as you might expect, on any of the accounts. So if you want to go to the 50,000 account, it's $260 as opposed to $355 for a pro account. If you want the standard account, it's for 50,000. It's $258 as opposed to $345. Okay, so come and give us a go. We're here to help. We want you to be successful, and there's real money to be made trading these simulated accounts, guys. Prove yourself, either 1 step, 2 step, get your funded account, prove yourself with your funded account, and then there's real money to be had. We pay out every Friday. You can pay out 7 days after you've opened your funded account, 7 business days. So come on, give it a go. And 90% profit share if you go to the pro account. That's another benefit of the pro account. Not only can you trade news, but you got 90% profit share. So it's just a bit tighter, the targets. So have a look for yourself. All right, take care, everyone. I will see you tomorrow. Tomorrow, it's Friday. We're going to wrap the week up. We've got durable goods out of the US, but there's still plenty of data, plenty of potential action today still to come. Those PMIs out of the United States, second speech by Miss Lagarde, but she's still speaking at the moment. And let's have a look at. Let's leave you with the euro. It's the currency of the day. Sorry. Where we are. Let's see what action she's moved. Has moved the. Remember, we were long and then we went short, and there was. As per usual, Miss Lagarde has said something that's spiked the euro to the upside, unsurprisingly, and when she's finished the statement, so she's obviously coming relatively to move things again. I don't know what she said, but certainly has. Dark Pips, I hope you're still here and you've joined us, and try and find me on our Discord group. Okay, take care, everyone. See you tomorrow for